Switzerland, a landlocked nation amidst the majestic Alps, evokes images of breathtaking scenery, precision timepieces, and delectable chocolate. Yet, beyond its idyllic facade lies a long-standing reputation as a global hub for banking secrecy. Swiss banks have long been synonymous with discretion, privacy, and confidentiality, attracting a clientele seeking to safeguard their wealth from prying eyes. From wealthy families to multinational corporations, Swiss banks have catered to a diverse clientele. The promise of ironclad secrecy laws and a stable political environment has made Switzerland a magnet for those seeking to shield their finances from scrutiny. The image of numbered accounts, known only by a select few within the bank's walls, has become synonymous with Swiss banking. This heightened level of anonymity has fueled speculation and controversy, with some accusing Swiss banks of facilitating tax evasion and money laundering. While Swiss banks have made strides to shed their image as a haven for ill-gotten gains, the legacy of secrecy continues to linger. The origins of Swiss bank secrecy can be traced back centuries, deeply intertwined with the nation's history. Switzerland's tradition of neutrality played a pivotal role in shaping its banking industry. Switzerland remained a neutral ground, a safe haven for refugees and their wealth. In the 18th century, Swiss bankers began attracting foreign clients seeking to protect their assets. The foundation for modern Swiss bank secrecy was laid in 1946 with the Federal Act on Banks and Savings Banks. Black money, a term shrouded in secrecy, refers to funds earned through illegal activities or income concealed from tax authorities. Swiss banks, with their reputation for impenetrable secrecy, have long been a destination of choice for those seeking to conceal their ill-gotten gains. The anonymous nature of numbered accounts has made them an attractive tool for individuals engaged in tax evasion and money laundering. The flow of black money into Swiss banks undermines the integrity of the global financial system and deprives governments of much-needed tax revenue. The fight against black money has become a global priority, with international organizations and governments working to increase transparency and crack down on tax havens. The process of opening a Swiss bank account, once shrouded in mystery, has become more transparent in recent years. However, it remains a more rigorous and demanding process compared to opening a bank account in many other countries. Swiss banks, under increasing scrutiny from international regulators, have implemented stricter due diligence procedures to combat money laundering and tax evasion. To open a Swiss bank account, individuals are typically required to provide proof of identity, residency, and the source of their funds. This may include a valid passport, utility bills, and bank statements. Numbered accounts, once a symbol of Swiss banking secrecy, are still available but are subject to even stricter regulations. These accounts, identified by a unique code rather than the account holder's name, offer an added layer of anonymity but are typically reserved for high net worth individuals and require significant deposits. The cost of opening and maintaining a Swiss bank account is generally higher than in other jurisdictions due to enhanced due diligence procedures and the Swiss franc's strength. Section 5. The price of privacy. Weighing the risks and rewards of Swiss banking. Swiss banks offer political and economic stability, strong asset protection, and high confidentiality. Their neutrality and legal framework provide security for safeguarding wealth. Known for financial stability, Swiss banks offer tailored investment services. The Swiss franc hedges against currency fluctuations and economic uncertainty. However, increased scrutiny from international regulators affects financial privacy. Swiss banks must share information with foreign tax authorities. High costs and fees can erode investment returns. Weigh the benefits and drawbacks before choosing Swiss banking. Section 6. The walls begin to crumble. International pressure and Swiss banking. For decades, Switzerland's banking secrecy laws stood as an impenetrable fortress, shielding account holders from the prying eyes of foreign governments and tax authorities. However, the once unassailable walls of Swiss bank secrecy have begun to crumble under mounting international pressure. The global fight against tax evasion and money laundering has intensified, with Switzerland facing increasing scrutiny for its role as a haven for undeclared assets. The OECD's initiative on the exchange of information for tax purposes has led to the signing of numerous bilateral agreements, compelling Switzerland to share financial information with other countries. The United States, in particular, has taken a hard line against Swiss banks suspected of facilitating tax evasion by American citizens. These investigations resulted in hefty fines and penalties for Swiss banks, forcing them to re-evaluate their practices and cooperate more closely with foreign authorities. The era of absolute bank secrecy in Switzerland is coming to an end. Section 7. Case study: the HSBC whistleblower and the fall of Swiss secrecy. The erosion of Swiss bank secrecy was dramatically illustrated by the case of Hervé Falciani, a former employee of HSBC's private bank in Geneva. In 2008, Falciani stole a massive cache of client data from the bank, revealing the identities of thousands of account holders from around the world, many of whom were suspected of tax evasion. The stolen data, dubbed the Falciani list, was shared with tax authorities in several countries, leading to investigations and prosecutions for tax evasion. The HSBC case marked a turning point in the fight against offshore tax evasion, demonstrating the power of whistleblowers and the increasing determination of governments to pursue individuals hiding assets abroad. Section 8. The future of Swiss banking. A shifting landscape. The Swiss banking industry stands at a crossroads, grappling with the legacy of its secretive past while navigating the demands of a rapidly changing global financial landscape. The era of absolute bank secrecy has come to an end, replaced by a new era of transparency and international cooperation. Swiss banks have made significant strides in recent years to enhance their due diligence procedures and comply with international regulations. They have strengthened their anti-money laundering controls and are more willing to share information with foreign tax authorities. The Swiss banking industry is undergoing a period of consolidation, with mergers and acquisitions reshaping the landscape. Swiss banks are adapting to the new reality by focusing on their strengths, such as wealth management expertise, political and economic stability, and the Swiss francs' safe haven status. Section 9. Conclusion: Swiss bank secrets, a legacy in transition. The story of Swiss bank secrecy is a tale of changing times, shifting global power dynamics, and the relentless pursuit of financial transparency. Switzerland, once a bastion of financial secrecy, is being forced to adapt to the new realities of a world increasingly intolerant of tax evasion and illicit financial flows. The allure of Swiss banks has waned, replaced by a more cautious approach from individuals and businesses seeking to safeguard their assets. Yet Swiss banks continue to play a significant role in the global financial system, with their expertise in wealth management and the stability of the Swiss franc remaining attractive to a global clientele. The future of Swiss banking lies in embracing transparency, adhering to international standards, and leveraging its strengths to compete in a rapidly evolving financial landscape. The legacy of Swiss bank secrecy is fading, giving way to a new era of financial transparency and accountability.